some more details about IRR and NPV and how you calculate it. So here we have the formula for the NPV calculation. So basically we have the cash flow to equity from the cash flow statement, and we discount the payment of each period, here T, by 1 plus the hurdle rate to the power of T. And T is, again, for year 1, it's 1, year 2, it's 2, year 3, 3, and so on. When it's a monthly model, it's a little bit more complicated, but for this simple example, I think that should be fine. So basically, here in this example, we have a payment in year 2020, an investment from 10,000 euros. In year 2021, we have a cash flow to equity of 3,200. So that's our return, our dividend, then 2,600 and so on. And now we want to see what's the present value of the 3,200 euros in year 1. So that's why we divide them by 1.05 to the power of 1. Why 1.05? Because our hurdle rate is 0.5, so 5%. So these 3,200 euros have a present value of a little bit more than 3,000. We have the same payment here in the year 2024, but because we received this payment later, only after 4 years, the present value is also much lower, only 2,633 euros. So this is meant with discounting cash flows, and to calculate the NPV, we then sum up all these numbers, so minus 10,000 plus 3,000 plus 2,300 and so on. And at the end, this leads to an NPV of a little bit more than 1,000. And what does it mean, 1,000, an NPV of 1,000? This means this investment is profitable. So we can do this investment. When it would be less than 0, it would not be profitable. So you don't do this investment. One of the problems of the NPV is that it's an absolute number. So like that, it's also quite sure that a bigger project, a wind offshore project, for example, has a higher NPV than a smaller PV project if the rest is more or less the same. So that's why it's quite important to also calculate the IRR, because the IRR gets you a percentage, a relative number, and this number can, for example, also be compared to alternative investment, to the stock market or other investments, and yeah, it's better understandable. That's why we mostly use this IRR for investment decisions. So here we can see we have an IRR of 9.8%. How is it calculated? So basically we set the NPV formula to 0, and we look which IRR, so which hurdle rate or internal rate of return results to this formula, which means at the beginning we invest 10,000 euros and the internal rate of return would then be 9.8%. So the money would be, this would be the interest rate, which sums up to an NPV of 0. So this about the 2 most important KPIs